Howdy, everyone. It's been a hot minute. I can't lie to you since we've talked about some earnings. So I'm excited to get back into this. Earnings season's kicking off, and it is fantastic. Fantastic stuff here. Obviously, we started off with a week primarily focused on financials. Not a segment I'm particularly super knowledgeable about. It's obviously something I've been working on, but so far from those initial reports, we've seen some fantastic earnings results from some of these big banks that really look good for what the economic outlook looks to be. It's caused obviously some different fluctuations in the market from different reasons, but overall, we're going to go with one I know a little bit more about with PepsiCo, okay? A little bit more knowledgeable about this product because, it's something we all partake in. This has been a choppy trader today, there's no doubt. Start the day down, then proceeded to be up and then down again. Choppy trading through the entire day, but none of it's by an incredible amount. We're talking the difference between a percentage point here, so it's not like significantly up or down trading, all things considered. So, I just noticed this too. I guess this is a very commonly searched thing, but over on the right here, it tells you specifically the root beer brand, and they make Mug, which is, it's an all right, it's okay. We prefer Barks in this house, but we can't all get what we want. But interesting that I guess people search that enough to where they list it there. Smart stuff. But let's look at these earnings, baby. You remember I anticipated a beat here because of the fact that this is a company that has the added benefit of Frito-Lay and snacking, as we've seen some from consumer reports over the last quarter, have shown that snacking has actually been up quite a bit year over year. People are snacking the heck out of stuff. I think overall, people being locked inside has helped snacking as a whole too. People are they don't know what to do with themselves. They can't do anything outside, so you know what they're doing? They're freaking eating. So let's look at this. Non-GAAP EPS of $1.21 beats by 9 cents, and a GAAP EPS of $1.24 is a beat by 13 cents. So overall, a good profitability beat. Pretty proud of it. So you like to see that. You like to see these type of numbers out of this company. And from a revenue standpoint, actually quite impressive, I must say. Revenue of $14.82 billion, which is an increase of 6.8% year over year. Now we are going to go over a period over the next few quarters in which you're going to see a lot larger year-over-year growth, and that isn't necessarily going to be the sign of the company doing extraordinarily well. They're up against a year in which restaurants weren't able to provide them business, and restaurants make up a good portion of business for this company. Now, this quarter will flip where only 1 month, 1 month out of this quarter, or really close to half of a month, was impacted directly by shutdowns. So there is not much impact in this quarter, but it is a little bit, and it is a beneficial part for them that shows it makes it look like a larger year-over-year increase than it probably should be if you forego last year. So again, over the next few quarters, you're going to be seeing over 10% growth easily, probably close to 20 to 30% growth, just based off of the factor of their restaurant side of things. So keep that into consideration. It's a beat by $280 million, though, so pretty nice. Organic growth came in at 2.4% compared to a consensus of 1.7%, so not bad. So for guidance, we're looking at company continues to expect mid-single-digit increase in organic revenue. Not bad there. High single-digit increase in core constant currency EPS, and a core annual effective tax rate of 21%, and total cash return to shareholders of around $5.9 billion. Not planning any repurchasing of shares in 2021. Not necessarily a sign to avoid the stock, right? It's not necessarily something isn't ideal. But again, there's some high valuations in the market, and maybe they're just saving their capital for something else. So don't think of it as necessarily a bad thing. So stock buybacks, they're nice and all, but maybe they're planning on reinvesting in other ways, through the dividends or whatever it might be. We see overall organic sales up 18% for Asia Pacific, Australia, and New Zealand and China region. 3% for Frito-Lay America during the quarter. Organic Frito-Lay product, again, I don't necessarily know what organic product they sell, but they sell many a chip, so probably something there, probably some cauliflower chips or something. I don't know. Obviously, they don't give a full estimate in terms of revenue growth because, again, I said that's going to be a challenging factor for them. So, because it's going to be hard to predict necessarily because it's not something super easy for them to calculate. So, not shocked. Obviously, good stuff for the first quarter here. Growth of EPS of 29% year over year. Pretty nice. So let's look at some of these other results that we have. Overall, revenue-wise, 4% growth in Frito-Lay, 2% in Quaker Foods, nothing super crazy there. 5% in PepsiCo. In Latin America, they saw a 5% decline, a 2% in Europe decline. Africa, Middle East, and South Asia saw a 40% growth in revenue and a 70% growth in Asia Pacific. Pretty massive growth there, no doubt. And again, this is because in the China region, everything was already shut down during this quarter, so that's why you see such a large increase there. So just keep that in mind. That's going to be hitting us next quarter. You're going to see a massive, massive increase. Operating profit and EPS. Obviously, we see similar numbers here in terms of segmentation, which ones are up and which ones are down. Corporate unallocated expenses did decrease 63% though, which is nice. Guidance, again, we looked at that. Nothing super crazy. We'll look at the balance sheet on this fudger and see what we got. So, not super excited with this one. They only give a 3 months comparison. I prefer a full year. It's good to see pre-pandemic, post-pandemic numbers here. That's what I like to see. Total current assets coming around this company at $21.2 million. Now that compares to $23 billion prior. 3 months ago, obviously a little bit of increase there or a decrease there. So we'll see if we can find any rationale potentially, but overall it just looks like a decrease in cash position, so they probably paid off some debt potentially. We'll take a look. Total assets in general at $91 billion compared to $92.9. So again, slight decline, but it's all because of that current asset position. Current liabilities coming in at 22.6 or 22.7 really compared to 23.3. So a slight decline there for sure. Paid down a little bit of accounts payable. Total liabilities in general at 77.1 compared to 79.3. So again, overall, they probably paid down some debt. There's no doubt about it. You see the long-term debt line did decrease a little bit, so I bet that's part of it. Stockholder equity coming in at $14 billion compares to $13.5, so they did increase this liability or stockholder equity, I should say, on this company, which is a positive number. You like seeing that. We're talking about a company that is though trading at an EPS or a PE ratio in the high 20s, which for a consumer staples beverage company, it's kind of expensive, right? Still, I think this is a good long-term hold with Pepsi, but you do need to consider it's right near its 52-week high. 52-week high was at 148. Now the 52-week low is only at 126, so this isn't a stock that necessarily saw the most turbulence out of anything. I mean, by no means. You look, obviously, this 52-week is no longer including the March dip, but they recovered very quickly after that. They were back up in April. And really since that dip, when they recovered there, we're only seeing a 30% growth since then. So really insignificant. This last year was insignificant for them in terms of stock price. So you would kind of hope you'd get a little bit better of a deal on this thing, seeing as a big portion of their business in the restaurant side of things has just crapped out over the year. And now you're going to see that benefit with that growth this year. We'll see what it looks like for the stock price, but I think it's still a good one, just given the dividend and the track record of this company for a long-term hold. PepsiCo is a good staple to have. If you're interested in having any consumer company. So take a look at this. Have a good day.